on to the big story of the day, and that is the fall in Tata Motors PV. So, Darshan, it was a weak quarter that came in for Tata Motors PV. But could you talk to us about some of the major highlights from there in terms of the quarterly earnings, especially what impacted the business this time?
It was a weak quarter. It's a forgettable quarter. Both companies, Tata Motors Passenger Vehicle as a standalone business and consolidated business, including JLR, have reported losses for both these businesses. Look at the loss. Adjusted loss for Tata Motors standalone business was at rupees 237 crore versus profit of rupees 15 crore in the same quarter last year. Margin has fallen to 2.4% against 6%. For JLR, EBITDA margin, it was in minus 1.6%, while expectation was in the range of 2 to 7%. It's down more than 1,300 basis points. EBIT margin, again, it's in minus 8.6%. That is down almost 1,400 basis points. One of the major reasons why JLR has reported such a weak set of earnings because of cyber attack that company had reported in September or August or September. And because of that, in the consolidated segment, company has reported loss of more than rupees 2,000 crore. So overall, it was a weak set of quarter for Tata Motors.
It's a weak quarter indeed, and the stock is duly reacting to that as well. But the big question now, Sudarshan, is what next? Can we expect some improvement going forward?
So that's a big question. As far as Q3 is concerned for JLR, it's expected to be a weak quarter. Company is saying that entire impact of the production loss will be seen in Q3 and normalcy will return only in Q4 of FY26. And because of that, they have cut the guidance. For EBIT margin guidance, earlier target range was 5 to 7%. Now it's expecting in the range of 0 to 2%. Cash outflow, they have increased the guidance to 2.5 billion pounds versus earlier target of almost zero. About the cyber attack, they have not updated in their statement. They are just saying that operations are resuming and going forward, there are some of the launches, Range Rover launch, even on Jaguar front. They believe that next year will be better and FY27, entire normalcy, company is expected to return. So FY26 will be a forgettable year. FY27 only, we might see normalcy returning.
Okay. And Sudarshan, now, for the Indian business, can we say the worst is behind and there can be some acceleration here in the second half of the year at least?
So for India standalone business for passenger vehicle, outlook is in line with the industry. So the entire industry is seeing FY26 growth for passenger vehicle around 5 to 6%. Tata Motors is saying it will be 5% plus minus 2%. For H2, growth is expected to be in double digit. Now, which segment will aid the growth? So basically, more than the segment, for Tata Motors, new launches will be aiding the growth. Company is going to launch Sierra model in November, basically this month. Harrier and Safari will come in the petrol segment. That also will aid the growth. Good part is, company is gaining market share. In festive month also, for passenger vehicle, its market share has increased to almost 14%. In the EV segment, it's holding on to market share around 42 to 43%. So going forward, while JLR is expected to report weak Q3, for Tata Motors passenger vehicle business, we might expect some improvement.
Right. Sudarshan, Tata Motors, the big story of the day, both the CV and the PV business reporting losses, JLR cutting guidance, brokerages erring on the side of caution. The stock among the top losers today, 4.5% lower, any potential recovery getting sold into as well. Take a short break. Crypto markets on the other side. Manisha Gupta joins in.